Hello, Profit Hackers. I'm Jeremy Lott, the Chief Visionary for Foundation Accounting and Consulting. I owned a construction company for about 15 years before making a change to accounting because my accountants sucked. My goals are to simplify accounting for construction company owners, fuel your profits, level up your cash flow, and help you grow in a financially responsible way. So let's go. Hello, Profit Hackers, and welcome back to the Contractors Profit Hack Show. I'm Jeremy Lott with Foundation Accounting and Consulting. I am the host of this program, and I am excited to talk today a little bit about the process that we go through with my clients. Right. This process is detailed in the books that I'm writing. The first one is live on Amazon. It's called You Suck at Profit, and it's not your fault. And you can buy it there and read through it and understand these concepts maybe a little bit better. But I want to talk today at the very beginning concept, right? The series that I'm writing is called You Suck at Accounting. And the reason I'm going with that title of the series is because you do suck at accounting. And it's not your fault, right? The problem is that in 1929, the stock market crashed. A huge contributing factor to the stock market crashing was the fact that when a company prepared their financials, there were no rules about what went where. They put their financials together in a way that made sense to run their business. Now, there was a lot of lying and cheating and making up numbers and falsifying information, all that kind of stuff that was going on, of course. But for the most part, for the good, honest companies, they were just putting financials together the way that they made sense for them. Well, the problem is that when we don't have any rules and there's no standards, investors don't really know what's going on with your business. So when they're looking at the financials for one company and they're looking at the financials for another company and they're trying to decide which business to invest in, which one will get them the best return on their money, what they're faced with is a problem where they don't really know what's going on because both companies are recording things differently. And a lot of these poor investments, because of poor financials, contributed to the stock market crash in 1929 that led to the Great Depression. A few years later, in 1932, the government created the Securities and Exchange Commission, the SEC, right? This was their solution to preventing this kind of catastrophe from happening again. The SEC got together and formed committees and groups, and those committees and groups put together a whole long list of rules for accounting. Those rules today are called GAAP, GAAP, and it stands for Generally Accepted Accounting Principles. Stupid, right? Yeah, you don't need to know anything about GAAP. You don't have to know any of those rules, right? But that's why accounting feels so complicated. I have a good friend, and this good friend likes to say all the time, accounting is third grade math. You add, you subtract, you multiply, you divide. That's all there is in accounting. That's it, people. Now, when you get into analysis and those kind of things, yeah, there's some algebra and other things like that you need to figure out. But accounting itself is addition, subtraction, multiplication, and division. Third grade math, right? You can understand accounting. You can get it. Accounting isn't that complicated. The rules that the government has created around accounting, that's what's complicated. That's what hangs us up. That's what keeps us from really being able to know what's going on in our businesses, and what scares people away from QuickBooks and from a profit and loss and from the balance sheet, right? Now, you still have to have the generally accepted accounting principles, right? We have to have those so that our profit and loss and balance sheet makes sense to the IRS, to investors, to banks, and a few other sources, right? But those are the main things. We've got to have those rules so that an investor and the IRS and banks, when they look at your financial statements, they know what's going on. And they can compare it to other companies because everybody's reporting the same way. That's absolutely necessary. We have to have that, right? And that's why people like me have a job, because we know GAAP. And we can apply that and we can prepare your financials for the IRS, for investors, for banks, right? That's what we do. That's our job. But there is no rule that says that you have to use the GAAP profit and loss and the GAAP balance sheet to make decisions for your company. There are some things that just don't make sense with GAAP when it comes to running your company. The biggest thing that I can think of is your equipment, your large assets, your vehicles, all of those large tools, the things that you purchase that cost enough that the IRS and GAAP don't want you recording it as an expense for that year, right? What they want you doing instead is depreciating it and using depreciation, but it goes on the balance sheet, not the profit and loss. But last I checked, I have to have the large equipment. I have to have the vehicles. I have to have all of those things, the equipment, to be able to do the work. So when it's not included on the profit and loss, I'm missing something from my costs, right? I'm not able to tell what my actual profit is for the job because those additional costs are over on the balance sheet, not on the profit and loss. They don't play into the profit at all. So that's one of the biggest factors, one of the biggest reasons why government accounting is not helpful for us as business owners, because it doesn't include some of those things. The other big example is that according to GAAP, you can include direct costs in your cost of goods sold up top, right? So things like your direct labor, your direct materials, your equipment rental, your dump fees, your permits, all of those things are direct costs. One receipt goes to one customer, right? One receipt from a vendor or a contractor or these hours from an employee go to this job, right? That makes it a direct cost. So all of those things can go in the cost of goods sold. And so the gross profit margin on the profit and loss prepared according to GAAP is going to be your total revenue minus your costs. That gives you your gross profit. But that doesn't tell the whole story. because we also have all the indirect costs or overhead costs that also go on that truck to the job site, right? And so if you look down through the rest of the profit and loss, you'll find things like insurance, like cell phone, like vehicle expenses, including gas and repairs and registration, those kind of things, right? You'll find all small tools and equipment that you purchase. All of these kind of things are also costs that go on that truck to the job site. But when you pay your insurance for this month, you don't assign that one bill to one customer, right? You have to throw it in a bucket and pour it out a little bit on each customer, like we've talked about in the past on this podcast. And so in order to understand what your actual gross profit is, we have to include all of those indirect costs in the on-the-truck costs. We also have to include the equipment in the on-the-truck costs, right? Now, a good rule of thumb is that you want to replace your equipment every 5 years, right? So if I buy a truck for $50,000, I'm going to look to replace that truck 5 years from now. So I'm going to take that $50,000 and I'm going to divide it by the 5 years. I need to now include $10,000 a year in that overhead bucket, in the indirect cost bucket, right? Because that has to be poured out a little bit on every job so that after 5 years, I can purchase a new truck to replace the old one. Okay? So we have to include all of those costs in the equation when we're making business decisions and when we're figuring out how to estimate and how to price things. If we don't include all of those costs, then all of those costs come out of your potential profit. So the profit that you can make on a job is a lot lower when you don't include them up above. And as we go through the next several episodes and continue on with the podcast series here, we'll get into some more detail on all of that. But I want to rewind really quickly. Accounting is third grade math. It is simple. The thing that is scary about accounting is not the math. It's not the numbers. It's all the rules that have been created by the government to regulate and standardize accounting. That's the difficult part. You don't have to know that. Let your accountant worry about all that. Okay? You focus on the correct costs that you need to be considering in order to price your things right and to produce an estimate that you can have confidence in and know that you're going to make profit on that. That's where your focus needs to be. So thank you again for listening today. I hope I've been able to explain why accounting sucks and why it's hard for people and why it scares so many contractors off, right? It isn't the math. It's not the numbers. It's all of those stupid GAAP rules that the government has created, okay? So don't be afraid of accounting anymore. It's okay to be afraid of GAAP. That's fine. Just don't be afraid of accounting. This is Jeremy with Foundation Accounting and Consulting, and thank you for listening, and we'll talk to you later. Thanks for listening. If you found this episode helpful, please like and subscribe for weekly episodes to help you fuel your profit, level up your cash flow, and finance your growth. Until next time, go enjoy some green M&Ms and protect that cash.